doing? And all right, got there. So Dow with a big pop, and everybody had a nice big pop actually. Even the Russell participated, and we just tested just under 4,500. And tomorrow is the GDP report. It's Powell tomorrow or Friday from Jackson Hole? I think Friday. Did I say that this morning? I was smarter this morning than I am now. I think that's always true. I don't know. It takes a lot of brain power. I realize that. I use a lot of energy thinking. It's actually kind of stressful. Not stressful, but, you know, tiring. Powell will speak at the Jackson Hole conference. Nope, I didn't say what day. Okay. So I'm not smarter than I was this morning. I didn't know this morning either. I believe it's Friday. Powell, Jackson Hole. Excitement around Powell's speech evaporates. And the ever abundance of cash. Okay. Dun, 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 dun. Friday speech. So, attention is now turning instead to the September 3rd release of non-farm payrolls, which will set the tone for policymakers meeting next month, as well as the abundance of cash that builds up in the financial systems. That cash, which could add up to $850 trillion during the Fed's tapering, is likely to restrain how high yields can go over the next year, while continuing to stoke investment. You know, as money is sloshing around. So if there's a lot of money sloshing around, and it's not being put to use due to a lack of lending, people aren't lending, new projects aren't being initiated really, not a lot of stuff is getting done. So there's a lot of money sitting around. That means it's cheap to borrow. If you have nothing, well, look at our money, right? We have money sitting on the sidelines in portfolios getting 1%, whatever, from a sweep account. And that's plenty of cash just sitting on the sidelines. If somebody said to me, I'd like to borrow it from you and we'll pay you 10%, we'd be like, sure, it's not doing anything. So you know, when there's money sitting around, it's easy to borrow and it's cheap to borrow because there's competition for people who wish to lend funds, especially to quality buyers. I'm sorry, quality borrowers, not buyers. Like I said, I was smarter this morning. So that keeps a lid on the bond rates because again, there's no need to pay a lot of money. Nobody has anything better to do with their money, so there's no need to offer a lot. Money is just sitting there waiting to be put to some kind of use. And this is, of course, being caused by the constant creation of money. We're just creating more and more new money, and some of it goes to the market, some of it goes to the sidelines. It's building up and building up until we have this monstrous $1 trillion sitting around that's not doing anything. So that again, that makes it tricky for the Fed because when they taper, they're buying less mortgage-backed securities themselves. They're buying less assets themselves. But if there's plenty of money on the sidelines and those things get a little bit more attractive by moving up very, very slightly in rate, then the private money is going to come in and do that, and the Fed will have done nothing to increase rates. If they do nothing, if their action does nothing to increase rates, it's ineffective. They're trying to raise rates, they're trying to dampen inflation. What if they can't do that? What if there's too much money on the sidelines and no need for the Fed to be doing the tapering in the first place? It's just excessive. So that's an actual danger that the Fed doesn't have the ability to put rates back up. We can go through the better part of 2022 with abundant cash, and this guy's got 124 billion. Excuse me. So he should know. So the large investors have already parked $1 trillion in excess cash. Imagine this, it's like there's so much money sloshing around. It's just $1 trillion in the reverse repos. That vast pool of liquidity is still searching for a home as it continues to grow, sending people into the riskiest, crazy parts of the market like Asian equities, entertainment stocks beaten down in the pandemic like Viacom. It's funny. Cash pile. Blah, blah, blah. There's nowhere to put your money. That's what this says. There's nowhere to put your money. It's got to go somewhere. Where the hell are we supposed to put our money? It's crazy. So they're worried that the 10-year is going to go back below 1% again, and that's not very helpful. So Powell's got to be careful what he says, and then whatever he says can be undone by the non-farm payroll report next week. We have ADP report comes before that. It's going to be interesting. Meanwhile, today we have the durable goods report, which was anemic. We also have, what is this stuff? Investor small. What's the official name of this thing? Not you, not you. Investor confidence. So, investor confidence should have been out today. State Street. Set cookies. What's the point? Wow. Look at you investors. Wow. What the frick? That's really interesting. 110.1. So big jump. I mean, really, really big jump in investor confidence. People are super confident. So in other words, these are all up and down from the 100 line, basically, but we're at 110.1. So we were up here, last week was here. So in other words, this is just showing you the advanced decline. So last year we had decline, decline, decline. Not that it really hurt the market much. We had a bunch of declines. Then we had a little bit of more positivity, but this year we've had decline, decline, decline. So confidence was pretty low. And now it's up here, which is crazy. So investors are fairly confident. Let's see if we can get a longer term thing of that, just for perspective. So you see, it's not a real good correlation, is it? These are past years, so we'll be good to get something more real, more current. Wow, these are not current at all. What do you do with these? You get the timeline, right? You know, oh, there it is. Tools, time, past month. High yield. High yield. Why are you guys all mixed up in that stuff? German investor confidence is very bad. Down there. What's this one? Nope, don't know what that is. Here's investor optimism. Not quite the same thing. That's okay. Oh, that's Germany again. Oh, Germany came back nicely. All right, I mean, it's very difficult to find the thing. Investor confidence, small business confidence. Oh, there you go. That's interesting. So when's this as of? La-di-da. August 10th. Very recent. Okay, cool. All right, so here we go with the Federation of Independent Business Optimism Index has been sort of like blah, kind of flatlining around 100. The survey net percentage, I guess this does not obviously include because it's from the 10th, doesn't include today's spike back to 110. But just so you have perspective on it, okay, 110 is way up here. And that's about as good as it gets. We are about as optimistic as you're going to be. And when were we this optimistic? We were optimistic like this in 2005. We weren't even optimistic in 2007 before everything crashed. People had already lost confidence. But where were we? We were down where we are now. So, until we're way out of the danger zone, but this thing fluctuates a lot. Then this is a net percentage of firms expecting an improved. Okay, what's the percentage of firms expecting improved economy? It is, I don't know what minus, but how could it be minus 20? Net percentage expecting higher sales. So there's no net percentage. I'm not sure what they mean by that. But anyway, bottom line is we're not, the firms expecting improved economy is ratcheting down pretty sharply, frankly, from the beginning of the year. So net percentage of firms expecting an improved economy is, it's probably, I mean, well, look, it's about as bad as the reading's going to get, right? In 2008, here's what people went to. We only bottomed out where we are now. And that's early 2008, before the big crash. So I think you probably take this seriously as a warning sign. In 2020, well, in 2020, nobody knew this was going to happen, but they should have, of course, but they didn't. But I would not call that the same thing. But I would be very concerned about this. This is not a good sign. So in July, it fell 2.9, leaving the index below 104.5, blah, blah, blah. So, details within the report. They're talking about the last report, though. I don't know why I can't get the current report. Would be nice. Small business optimism index. July 2021. Small business optimism dips in July as labor shortage remains the biggest challenge. What? Oh, that's the same one, except for April. Pretty useless. All right. Oh, stop that. No, I don't want to go there. Oh, there we go. Okay. Wow, this is so unhelpful. That is funny. I mean, why can't you just find something on the web? What did we do wrong? We had this amazing thing that was going to put all the information of the world at our fingertips, and all we did is figure out how to advertise. All we do is figure out how to stick an ad in front of every single thing you do. You cannot read a paper or a magazine, and yes, in print the ads are there, but they're not as obnoxious. You could read a whole book without reading an ad, or if you're reading Newsweek, you could read and again, not these days, but when I was a boy back in back in the 70s, which is a frick long time ago now. But when I was a young man, we used to read a magazine, and there were very few ads in the magazine. They would support the whole magazine, no problem. These magazine publishers were wealthy without having to slam ads in your face constantly. I don't know what's wrong. I really don't, but something's wrong. I watch, oh, that's weird. I watch CNBC I got a smart TV and I watch CNBC on YouTube TV. There's something called YouTube TV. Subscribe to it. You get all the regular channels on YouTube TV. And the nice thing about it is it's also its own DVR. So it like has unlimited DVR for shows. It's kind of nice actually. So instead of cable, we have that on the smart TV. It's good. But anyway, point being that when I watch CNBC, the thing that I notice, because they don't have local ads, so they only show you like some ads, but not many. And mostly what happens is during the local ads, the thing just goes blank. And you realize that there's so little content out of the time that you're watching the shows. You know, it's almost all ads. It's a good 30-40% advertising. It really is maddening. I don't know. It's kind of like I know when I had the regular CNBC, I would be annoyed at the commercials because they were so loud, and also the same freaking commercials over and over again for My Pillow and whatever. But the thing was that at least you didn't notice how short the segments are. Now I notice how short the segments are of the show, and that goes for TV shows too. Because like, you know, again, same thing. And we got the smart TV because my old TV was not a smart TV. We're watching any show is 40 minutes. So 20 minutes out of 40 minutes, which is 1/3 of the entire show, is ads. Anytime you watch anything, 1/3 of what you're watching is advertisements. And when did this all happen? How are things so messed up that we are sitting here watching and being advertised to and having ads interfere with us and pop-ups come up and they tell us they got this privacy law, and the privacy law, it basically just makes you accept cookies the way that you accept you know, when you are downloading software and you have to accept the licensing agreement for the software. It's the same crap. I'm not going to sit there and read all this stuff. So you end up just clicking accept the cookies. What's the point? It's a terrible system. So they changed the law, and now you accept the cookies. And I guarantee you that when you say accept cookies, it's worse now than it used to be. Probably they're probably taking full advantage of these guys. But anyway, that being said, so businesses not as optimistic as we'd like. Although this reading now is better, but this is not a good trend, and it's not going to reverse because of one thing. So business optimism, not exciting. Here's where it is. Plan to increase employment, plan to make capital outlays, plan to increase inventories. Now forget all these plans could be out the window now with Delta. Expect the economy to improve. That's not good. Expect retail sales higher. That's not good. I don't know what negative 3% means, frankly. I mean, is that a change of 3%? Current inventory, current job openings, everyone's got job openings, credit conditions, not negative 4%. Is it a good time to expand? Only 1 out of 10 people think it's a good time to expand. Earnings trends are down. Why does that say 2016? Why does this say 2016 when this is current? What on earth? Oh, I don't have time for this. Oh well. Mountains 102. What the hell? Hover over a state, but it only works over the first state you hover over. Oh, I see, the whole region. Okay, you have to change regions. This seems very meaningless to me. All right, well, not helpful, sorry. Just really thought there'd be more to it. Business sentiment is a series in the Fed. Anyway, all right. The thing is, it's hard to get granular data, like really up to the minute data, and when we get these reports, they're telling us what people were saying a month ago, basically, and you can't tell how things are changing. I see it on the ground, and again, I'm in Florida, and I don't get a chance to travel like I used to. I had a better perspective when I traveled, but people are self quarantining again. And while we have a really liberal, liberal isn't the word. We have no rules about masks or anything, frankly, anywhere in Florida, apparently. Disney makes you wear a mask, which only just started when I was there. I was there at the beginning of the month with the kids, and we got there on Friday, and from Friday until Thursday, they didn't have a rule. On Wednesday, they changed the rule and said mask back on. From Friday to Wednesday, no mask. No mask anywhere, no problem. Everybody walking around happy. All of a sudden on Wednesday, they said tomorrow we're changing it back to masks. Then on Thursday, Friday, and we left on Sunday, it was masks, and I was like, I'm not walking around this freaking park with a mask on. But it was packed. It was very, very packed. I looked, and I saw the attendance levels for Disney were 35 million a day versus their normal 50-something million a day. And so in other words, they're 30% under capacity, I think, but I don't see it. I mean, it certainly was not reflected on the lines for the rides and so on and so forth. Not me, but the kids were waiting. They were waiting an hour, 2 hours for some of these rides. And oh my God, I was there. The only one I waited for went to the Star Wars land, and there's nothing you can do about it. You're going to be online. And in the Star Wars land, I waited on a ride for good, 45 minutes or so. It was just, from a perspective of being worried about catching a virus, it's horrible. You're winding in a passage with hundreds of people, and 1,000 people have just been in that room before you. And it's crazy. I don't understand why. I do understand why. We're a capitalist society. We are very big on freedom and all that. But you would think that in a time of an emergency, there should be people whose job it is to go around and say, that's got to close, that's got to close, that can't happen. Because not doing that is crazy. It's like when California says, hey, the ground is really, really dry, so don't make any fires. No camping with fires. Stop it, okay? Bad idea. Don't do it. If you do it, we could start a forest fire that engulfs thousands of homes. So therefore, we're going to tell everyone not to do it. That they can do. But when you're in a situation where millions of people could die from a virus, you can't walk around and say, don't engage in bad behavior. Don't engage in unsafe behavior. It makes no sense. What on earth are we doing? What is wrong with us that we entertain this bullshit? And you say other people. It's not other people. It's us. It's our fault. We're letting this happen. Here. Oh, this is what I wanted to show you. Yeah, because this morning I looked up. At first it did not register to me that this was all this weekend. I'm like, I wonder if there's any large scale concerts and stuff going on in Florida. Yeah, sure. There's Russ, there's Cat Williams. What is that? What? Okay, I don't know. I'm sorry. I don't, because I used to know who everybody was because I would be hanging out with the kids all the time. Now they're in college. I don't know what these bands are anymore. They change so fast. Look at this though. This is this weekend or around this weekend. These are all freaking concerts, comedians. That doesn't look, it looks like a fighter. He's a concert. Okay. I don't know what that is. Goo Goo Dolls. rodeo festival, punk festival. You know, this is kind of scary. UltraCon. Oh, is that like a Comic Con? It's right by me. See, now I want to go. I love comic book stuff. Um, wow. Paula Poundstone. You know what? You notice it's all the people who need money. It's not the rich acts are not touring. It's the ones who are like, you know, marginal are all the ones that are doing this. The Home Expo, the Pit Party. Look at this. This is crazy. This is how many events are going on in Orlando. We got a boat show, the gun show. There's always a gun show. That's ridiculous. There's seriously always a gun show. Always. It's like you can't arm the whole population without gun shows being constantly around. I'm still it's going to be packed. Oh, a monster truck festival. Ooh, that's a good one. Look at this. This is nuts, right? Holy crap. We're still not out of the 28. Gun shows. More gun shows. I told you it's all the time. It's not like a one-time thing. Holy cow. Oh my God. It's like so much worse than I thought. Look at this. All these are gathering of maskless people. Because it's Florida. There's no people with masks. Wow. Joe Rogan. Yeah. You think anyone at Joe Rogan's thing is gonna have a mask? There he is again. Joe Rogan again. 2 nights. What a guy. Holy, and the man of La Mancha. That's even classy, right? So, go see it. I would like that show. Wouldn't mind seeing that. It's tempting, but I mean, it's just, you know, but then you go to these things and you're looking around at these people and you start thinking like, okay, they're not wearing a mask. They haven't been wearing a mask. They're out and about. They don't care. And that means they didn't care yesterday. They don't care today. They've been in contact with how many thousands of other people who don't care. It's crazy. And our hospitals are full. We are out of space in the hospitals. The doctors just staged a walkout in I think it was Miami. The doctors just staged a walkout and marched in the streets demanding that the city do something because the patients are freaking piling up in the halls. And our governor will not only isn't the city doing something, but if anybody tries to do something, the governor finds a way to like fine them or hurt them. He does not want anything to be done to stop the spread of this disease. It is completely insane. And we're not even the worst state. That's the craziest thing about it. We're not even the worst state. But living in it makes you feel like it's worse. You see this is because we're going up so fast. It's hard for the 7-day moving average to adjust. Usually you have some smoothing to the 7-day moving average. In this case, we are stepping up at a very rapid pace. This is really terrifying. And the only reason this is flat is because there was no calculation made that day yet, so it showed flat. But the reality is, it's actually, I'm sure we're up again. But this is completely off the charts. Look at these things. That's only this is only the 7-day average. This doesn't tell you the actual cases. The cases are here. And that's how much the cases are dragging the 7-day moving average higher. So obviously it's the math of the 7-day moving average. I'm sorry, yeah, so there's a case count. Here's the case count. We're pinning the needle at 3,000 some odd cases. The average cases is getting to 1,500, but that's the 7-day average. Very soon the average cases, what's going to happen? The average cases, when we have 7 of these, is going to be there. That's going to be the 7-day moving average. Here's where we were last summer. Not last summer, last fall. We had one freaking day where there was a big spiky thing that was anywhere close to where we are now. So anyway, like I said, you got to get out. And so that's my, just to be sure, that's my Florida perspective, because you got to just say, well, okay, that's what Florida's doing. This was Wyoming, but this is where they canceled the Fed conference at Jackson Hole, because then when they send out invitations, they were here, and now they're here, and the Fed cancels their conference. Well, what the frick would they be doing here? Yet, this is what I'm saying though. Yet, nothing is canceled. Nothing. None of these things are canceled. Unless I lost it already. Anyway, none of those freaking events are canceled. Disney's wide open, SeaWorld's open, the other things open, Universal Studios, every park, everything, every gathering, all the restaurants in my town are open. Everybody's sitting inside, sitting packed inside, packed outside. Everything is packed. They just opened. Oh, they opened a new hotel. There was a party this weekend for my friends went to a party. I begged out of it because I was just like, I'm sorry, but the place they were going to was too crowdy and tight for me. But not next week, the week after next. Anyway, the week after next is another party. I feel like a stick in the mud. I really do. I mean, all these people I know are going to these parties and having a great time. Oh, I know it is. The one that there's a new hotel in town, and they're opening, and there's a big exclusive rooftop party thing going on. I'm going to go to that. That's outside at least. But again, nobody's taking a step back. Nobody's doing anything. I didn't even ask. They're having a party at the hotel. I didn't even ask if you need masks. No, you don't need masks. Nobody has masks. Nobody wears masks. Not down here. It's just completely off the rails, crazy. This is a state that you can see where it gets forced on you, because I'm the crazy one, because I stay home and try to avoid people, because I would like not to get COVID. And it's honestly, it's not the issue for me. It's not the getting COVID. I think you get it, you recover, whatever. But I think that they don't know what the long-term effects are, and there seem to be like some long-term debilitating effects. And how is that worth it? How is that worth taking a chance that for the rest of my life I may have some problems? Why would I want that? And it does get a bit much. Now, I had a good time. I will admit that I had a very good time from when I got vaccinated in May until a couple of weeks ago. I was having a very good time. I went out a lot. I socialized with people. We did some stuff. I played poker. Had a life for a good 2-3 months. That's over now. Because it's worse than it was last year, but they won't do anything about it. That's even crazier. It makes you realize how these zombie apocalypse movies can happen. You say, how do they let these zombie apocalypse happen? Well, they let it happen because nobody does anything about it. Everybody's plan is, well, try not to get bit by a zombie. Stay away. We're not going to actually round up the zombies, as like the humans, while they still outnumber the zombies, don't make a plan to outnumber the zombies and stop them from spreading. No, instead, everyone gets bitten and everyone turns into a zombie. We are stupid people. We really are. This is just, it's a farce, except that it's your life. So anyway, I'm sorry. There's so much on my mind about that. Like, I tried to talk about the economy, but the economy comes back to, we are in a pandemic. We're in a global freaking pandemic. It's really, really serious. Where's that Hopkins thing? Hopkins COVID. There it is. Google knows what I like. Or maybe not, though. That's not it. You're not the Hopkins one. You're the Hopkins one. 5 billion doses of the vaccine have been administered. 213 million total cases. 4 million people are dead worldwide. The US, what is this 28-day bullshit? Wow, that's really nasty. Why on earth would you do this all of a sudden? All right, well, anyway, taking data as is. Look at this. We're worse. Look how much worse we are in 28 days. Look, try to keep in mind that this country has 4 times more people than we do, or 3 times more, 4 times the number of people that we do. They have 1.2, 1.3 billion people in India. We have 300 million people in America. 1% of the population of the United States caught COVID in the last 28 days. 1%. That means currently infectious people, 1% basically right now. India, 1 billion is 0.1% basically. So it's at 1/10 our pace. 19, we have more people dead than India too. Wow. So even with our phenomenal look compared to India's hospital system, which frankly is good for the upper classes, it's actually fine. But compared to India's hospital system, we had a way worse death outcome than they did. Iran, not as bad as the States. Brazil, not they got more deaths. Brazil's got more deaths, but nothing near our numbers. UK, terrible, not near us. Great health system though. Look at that, freaking 2,000 people died. You almost don't mind having the virus if you can keep your death numbers down, but we're not keeping ours down at all. Russia, look at this stuff. Let's see if we can find China. You know China's going to be near the bottom. Chad. Oh no, there it is. Cool. Here's some good countries. Here's people who really have their crap together. Solomon Islands, Samosa, Micronesia, Marshall Islands. No people there, but you know, at least it's nice. We're the real country. Grenada. Remember we invaded these guys? We won that war. Liechtenstein, good for them. Wealthiest country on earth. Mali, New Zealand, South Sudan. South Sudan better than us. That's great. Monaco, well, that's not great. Haiti, we're getting our ass kicked by Haiti. Oh, they got totals. Wait, I'm sorry. I wasn't even paying attention. They have totals. So 38 million people, 1 out of 10 people in America have had COVID, more than 1 out of 10. 630,000 people are dead. So that's what, 1 out of 50? Is that correct? You multiply by 50? Yep. So 1 out of 50, what? No, not 50. 500. 1 out of 500, only 1 out of 500 people are dead. 1 out of 15 people, no, 1 out of 10. 1 out of 10 would be 330. So this is less than 1 out of 10, 1 out of 9. Let's just do the math. So we're going to take 38 million divided by 330. 11%. Well, that's not really helpful. 330 divided by 38. Not 8.6. 1 out of 8.6 people in the country have had COVID so far. But in the last month, we added 10% to the total. And I'm sure this month we're going to blow past that number. So let's see if we have is this a global scale? Weekly cases. So this is the whole world. 213 million cases, 17 million last 28 days. So that's interesting. So it's backwards from this. But so in other words, this pace, 1 month divided by that is less than a tenth. So in 1 month, it's less than a tenth, but not enough less that you can be happy about that. And are we less than a tenth? We're less than a tenth too, probably by about the same. So we're growing cases at a pace where we'll double the cases. So from all the cases so far, we're growing at a pace that will double the cases in the next 12 months. That means we've made no improvement at all. We have absolutely no way, shape, or form improved this. And at that point, we will have, double these numbers. Basically, we'll have 70 million people. 1/3 of the people in America will have had COVID in a year. And there's probably no way to stop it because it's going through the unvaccinated population by wildfire. So unless we can convince those people to get vaccinated, eventually 100 million people who are not vaccinated in America will get COVID. So that's that's spreading very fast, that variant. So, maybe that's the herd immunity we're looking for, though. Let all the people who didn't want to get vaccines get COVID, and you've got your herd immunity, and everybody else got vaccinated. We might get COVID. We get mild cases, whatever. Hopefully. And then, but it's still not over because it still mutates and you can get it twice and so on and so forth. But look at where we are. This is where we are now. This is where we were last summer. We're in the same place we were last summer, basically. We were much, obviously, compared to July. Where are we? We're 816. We're 2 million a day here, 4 million a day here. Between this part of the year and here, we actually doubled up. If we double up from here, we're going to be up here. And how does that not affect, commerce and the economy and such? How is this not going to be a big deal? Now, we're ripping it with the vaccine and the doses and so on and so forth, but it's this problem of the people who refuse to be vaccinated. And even in Europe, vaccine percent. See? I always there every time do that. I've done that. I've gone through those things. I just got sick and tired of it. Wow, what is this number? Doses by country per 100. Oh, I see. So in other words, if you want to be fully vaccinated, everybody should have two. You should have two. You should have 200 doses for 100 people. A little confusing. So Denmark, I don't know what you would say about that. You have to assume that's going to be 70% of the population, right? Figure everybody's gotten 2 doses. Obviously, there's some kind of rolly trend. But here's the thing. They are not any better than us. Right? They're in the 70, 60, 70% range in their vaccinations. They're not doing better than we are. Can you switch regions on this thing without going? I'm just going to make something up if I have to do it. COVID deaths worldwide, deaths per million, say COVID cases. State of health. I love Statistica, they're really good. North America, just guessing. Nope, that did not work. Let's see if we can go back. State of health. Global health, diseases, mental health. Okay, now it's too much work. Deny. All right, anyway, so you get the idea. The bottom line is, so Europe, not much better than us. I'm not sure Asia. I'd like to know, what did I write last time? How did I get to this topic? Europe, okay. Asia. Vaccine percentage, vaccination rate, APAC. Statistica, much easier to read. Now, what do you tell? Now, here we got percentages. So, Singapore 85, China 70, crap in the other countries. This is terrible. All right, so China's whacking it out, but only as good as we are. Singapore is better, and we did Europe, right? And let's see, North America vaccine percentage. Isn't it funny? A statistic it doesn't bother with that one. But anyway, point being, so 1/3 of the people on the planet have not and maybe never will get vaccinated. And I mean, what did that thing say? 5 billion people were vaccinated. 5 billion doses so far. So 5 billion doses, 2.5 billion people. That's not even 1/3 of the planet. So 2.5 billion people have been vaccinated so far on the planet Earth. That's less than 1/3 of all the people. Basically, the top 20% got vaccinated, except for the idiots who are in the top 20% but aren't smart enough to get vaccinated. But other than them, everyone got vaccinated in the upper class. But the problem is, that doesn't save you. If you're not getting everyone vaccinated, the virus just comes back and comes back and comes back like the cold. And I don't know if you guys get flu shots, but if you get the flu shot, you still get the flu once in a while. You hopefully don't get a bad case of it, but you still get it. So, it's not you can't mess around with this kind of stuff, and we're just not making the effort. And I'm very concerned about like how that's going to affect long-term productivity and other stuff. And again, we may be forced. You could pretend something's okay, and you can say, oh, it's not that bad, or the cases are mild, and this and that. But we have some really nasty death numbers, and that's got to indicate how many severe cases are out there. And nobody's thinking about this. People have COVID, can be lethargic, can be sick, and can be tired for weeks and weeks, and that's going to impact your productivity. So we need to look at that. We're going to have the GDP report. We get the GDP report tomorrow, and we're going to see some of that. But again, it's too laggy. That GDP report is from ended June 30th. Not going to show us what happened in the last 2 months. Last 2 months have been nasty. And that's the problem when you're investing, because you're investing on something based on data that's old. So Clay says, the problem with Europe is they don't have enough vaccine to give out. Yep, that's one problem. And by the way, there's a lot of countries that are really pissed off at us because we're going for dose number 3. And they haven't had dose number 1 yet. There's a lot of places that are like, there's a shortage of this stuff. You can't get these vaccines. And, so you have to wait in line as a country. Even if you're a country, you have to wait in line and be lucky if Pfizer gives you an allocation. Meanwhile, in America, we're just sending everybody out to get another dose now. And by the way, get the other dose because apparently, I think it's not Pfizer. It's like Johnson & Johnson did their study or whatever. One of them, not Pfizer, not Moderna, but one of the other guys. But they did an efficacy study, and it's like it really does like reduce your chances of getting infected by like 10 times, 1/10. So you have 90% less chance of getting COVID, if even the Delta, if you get your booster shot. So why would you not do that? I was really sick though for 2 days after I got my second shot. So I got to tell you. So I to tell you why I wouldn't do it, but I would still do it because you have to balance out the good with the bad. Bloomberg best global vaccination tracker. Okay, I'll bite since I can't highlight it. Here we go. It's from JC. See if he knows what he's talking about. Oh yeah, who got vaccinated? There you go. That's great. Who got a shot? You get a shot. You get a shot. So, wow, is that up to today? Seriously? I thought we were better than that. Yeah, updated August. That's sad. Only we're not even at 60%. I thought we were at 70%. Very, very sad. I guess probably they count 70% because people who've had one dose and not that many people had second dose. So Canada, very well covered, but still 70%. Look at Greenland. They only have 100,000 people. They get their shots. Iceland, getting their shots. Good job, Iceland. England, getting their shots. Ireland, getting shots. Germany, not very good, 60%. France, 65. Now, France, one of the best medical systems in the world, can't get those people to get their shots. That's pretty sad. Sweden lagging, Norway lagging, Finland lagging. By the way, Canada though was desperately trying to get shots. Was it last year? Well, anyway, when they came out and they got screwed and they couldn't get their shots, they were freaking out about it. But now they seem to have dealt with it. I guess Trudeau did some horse trading. But you can see, look how fast it drops off. Africa, like nobody. Saudi Arabia, 51%. Oman, UAE, 80%. Bahrain, Kuwait, Jordan, Yemen, Sudan, Egypt, Libya, Chad, Algeria. Crazy, huh? 3%, 1%. Isn't that nuts? See how that's influenced? In South Africa, they're even terrible, 11.2%. But you see these spheres of influence from people who do get their shots tend to bleed out to the neighboring places, but then it fades away. Russia, 26%. That's because, Russia's like Republicans. I mean, they're independent. Kazakhstan, 30. Mongolia's into shots. Well, that's because of China. See, that's the influence of China hitting Mongolia. Australia, terrible. Japan, terrible. South Korea, terrible. Shame on South Korea. Taiwan, terrible. Oh, isn't that interesting? Why is Taiwan so bad when China's good? See, China, you claim Taiwan's part of your country, yet you don't vaccinate. Wow, it's just crazy. Alaska's put up in the U.S. Hawaii put up in the U.S., right? Not a separate thing. So this is where we've decided the virus can spread out of control, and we'll pretend it can't affect us, right? Like Ebola. Like, don't worry about it. It's over there. So, and here's countries that, Eastern Europe basically don't seem to care. Middle East don't seem to care. Europe, but still, the problem is all these countries, even China. I don't know what the problem is in China. You would think they would get everybody vaccinated. You think that they could do. Still 70% not vaccinated. I'm sure they're not vaccinating any of the Uyghurs, those poor guys. I'm sure none of those guys did. That'll complete their genocide over there. But what are we doing? We have this Delta variant is going to infect everybody. Everybody who doesn't have it is going to be infected. And if you go back to those numbers we were looking at before, what was it? It was 30 million people. We have 600,000 people divided by 30 million people infected, right? So 2% of the people who get the virus are going to die. And we have 30% of we're not even doing that, but even if everybody is vaccinated in these countries, we have 30%, but currently we have two-thirds of the world not vaccinated. At best, we're going to have 3 billion people. 3 billion people who are not vaccinated, and very likely that over the course of the year they're going to get COVID times 0.02. Ugh. That's just not acceptable. That's what we're looking at. At the rate we're going now, with not even 2.5 billion people basically vaccinated now. We have 8 billion people on the planet. So even if we vaccinate 2.5 billion more people, at the rate the virus is spreading, virtually everybody who isn't vaccinated will get the virus. That would be 3 billion people will be exposed to COVID, will develop COVID. Those 3 billion, it's everybody. It's like how many people will get the sniffles during cold and flu season if nobody's vaccinated? Pretty much everybody. It's a highly transmissible disease. And also people who got vaccines, we're still carriers. We still get infected. We still carry it. Even if we have no symptoms, we can carry the virus without an effect. Our system fights it, but we still have it. So we don't block. We're not like a real firewall to the virus. It stops other people from getting it. The herd immunity concept doesn't really work that way. Yeah, and so you're looking at 3 billion people becoming affected, and 2% of 3 billion people is 60 million people die. And by the way, though, that's a problem because we're looking at that blending in the US health system, the European health system, so on and so forth, whereas the people who will actually get sick are predominantly in poor countries, may have a much higher death rate. And we're letting this happen. We are not doing anything to stop it. Complete tragedy. It's 100 years after the Spanish flu killed the same amount of people. And there were way less people on the planet back then. The planet, there was probably it had the same death rate among a much smaller population of the planet. But that's crazy. That's a crazy number. And we're letting this happen. And there's already, what was it, 5 million people dead or whatever the number is from this. And 10% of those people died right in this country. But this is a way bigger number, and it's spreading fast. And I don't know. And the market doesn't give a crap. Here we are. So Pfizer, gotta love it. Good stock. Let's get into that. The thing about Pfizer, Phil P. F. Did I actually write Phil? That was weird. Pfizer. So, Pfizer got much more expensive, but they're going to have a blast of a year. They're going to be doing more vaccines, so on and so forth. You've got Moderna, mRNA, also going to keep having good times with the constant vaccinations. And of course, I like Walgreens. Still very cheap at $48, Walgreens. Not bad. Where'd it go? There we go. WBA. Why do we like WBA? Okay, $42 billion at $49. Okay, $42 billion. Keep that in mind. Now, they're going to make, they did make $4 billion here, $4 billion here, $4 billion here, $5 billion here, $4 billion here. Oh, they were closed, and they still made $500 million. Basically closed, still made $500 million. Now, back to $4 billion, back to $4 billion. They're going to make $4 billion a year. You can buy them for $42 billion. You're getting 10 times. You're paying 10 times earnings. Plus, they have growth prospects. Plus, I think that you're going to be getting future doses of the vaccines at Walgreens, at CVS, obviously other places too, but they're going to be more and more Walgreens and CVSs that have the vaccines, and that means, and if you've gone to these places lately, people are getting them now in Walgreens and CVS, and you see people like always sitting in line around the pharmacy waiting to get their vaccines. That's customers. You know, and Walgreens is set up like a 7-Eleven. So, you know, it's like this customer is sitting around in a place staring at all the stuff. That's pretty much what you pay to have in retail. They got a little uptick in that. They'll get money from the sale of the virus, so from the vaccines and so on and so forth. So I like Walgreens because it's already dirt cheap and there's an upside premise. These are the reasons to like something, and it's an upside premise that you can see right in front of you. It's a mandated upside premise. And we're not expecting them to do anything exciting, and we're not expecting anything revolutionary out of them. We expect them to go back to their same normal profits, but their same normal profits give you 10% a year. Now, how do you get 10% a year? How does that work? Well, they're paying 6% as a dividend. $1.96 is coming back as a dividend. That's fantastic right there, though. That's a great story, right? So $1.96 is a dividend. That leaves another 4% that goes into the growth of the company. So every year, the stock should get 4% more valuable. So, and that's not much. That's only $2, so $2 a year. But you see, here's how you can value the thing out. So basically, they're going to put $2 a year back into the company of stock per share. And so that's going to take you from 48 to 50 to 52. So 2 years, it should be up about 54. When the 2024s come out, then we would want to do like the 55 spreads. Oh, that's not Walgreens. I'm going to say, where are all the options? So right now, they only have January 23. So our target price is 52. Here's 52.50. So we could sell the 52.50 calls, and we can see that those are like 375, let's say. So 375 for these, and we can buy the 45 calls, and those are $7. Or now, here's the thing, right? When you say you buy the 45, so 45s are going to be $7.25, let's say. The excuse me, got this tickle. I think the 42.50s are $8.60, $8.65, whatever. So would I spend an extra to go from 45 to 42.50? Is it worth spending an extra $1.25? Yes, definitely. It's only half of the price of what you're rolling down. You're going more in the money. We strongly feel about the value that's going to go up. So that's probably a good place to be, is on the 40s. To go from here at $8.60 to these at $10.20 something is another $1.60. That's not bad, but there's no necessarily need for it. Here you can just take the 42.50 and let's call it $8.65. And here we take the 52.50 for 3 and let's call it 65 just to be convenient. So it's going to be a net $5 spread. So it's $5 for the 42.50, 52.50 spread. And you get $10 back at 52.50, which is our target, right? Now, how low do we think Walgreens can go? It's very unlikely to really go below an 8 PE. And you think about, like, what's going to stop them from making money? Well, another lockdown would stop them from making money, but then that's our premise that they'll make more money is the disease. So to some extent, we're not that worried about it from a long-term perspective, but in the time frame we're at, it could go lower. So we're so now we look at where they bottomed out. See here. So where did they bottom out last year? In they bottomed out actually around $33, $33.50 is where they came to a stop. That's quite a bit lower than we are now, but they did come back. And again, like I said, long term, we're not worried about it. So you got to balance that out. You don't want to be too crazy. But let's say that if we sell the $40 puts for $3, we're netting in for 37. That's very close to 33, right? We're probably never going to get in danger there. It's not really worth selling the high ones. We could sell the 45s for $5. That's kind of attractive. And here's my thinking on that. You get $3 for the 40s. So I could sell, let's say I sold, let's say we bought 20 of these spreads for $5 each. That'd be $10,000. And let's say we sell 20 of these for $6,000. We'd be in the spreads for net $3 in the 42.50, 52.50 spread. And we'd be obligated to buy 2,000 shares at $40. Or we could sell the 45 calls, but only sell 10 of those. We're still going to get $5,000 for that. We're applying that to this spread that was $10,000. And so now we're paying $5,000 for for a $10,000 spread. So, no, wait. $20,000 spread. The money wrong. If it's a 42.50, 52.50 spread, and what did we say that is? Oh, I see, I did the math wrong. It's net $3, we decided, right? 42.50 is net, no, net 5. So net 5 would be $10,000, correct. So if it's $10,000 and I sell 20 of the 40s, that's $6,000. That's a $4,000 net on the spread. But if I only sell 10 of the 45s, I get $5,000 here. My net is $5,000 on the 20. Wait, is it 20, 40, 42, 50, 50? It's a $20,000 spread. That's where I was running the trouble. It's a $20,000 spread because it's 20 of them. So it's a $20,000 spread, and I'm buying it for $5,000 instead of buying it for $6,000. I'm selling the 45s, which are higher, but it's not a higher obligation because I'm only buying 1,000 of them at 45. So what am I thinking? I'm thinking I have the flexibility to roll. If I'm assigned, I'm only assigned 1,000 at 45 instead of 2,000 at 40. So 1,000 at 45 is 45,000 versus 2,000 at 40, which is $80,000. So I have a lot more flexibility. I have more room to buy, and if it really does catastrophically fail, I can take these 45s can be rolled down to these guys, the 37.50s, at 2 something, and I can do roll to 20 of those, and then my net obligation will be 70,000 instead of the 80,000 I wanted. So there's no reason not to do that. I'm gonna get $1,000 less overall towards my trade, towards my spread, but I'm taking, I feel less of a risk, especially knowing that you can roll the January 22, for example. What did I just do? So let's say I had sold the January 22 $50 puts, okay, whatever, and now they're $5.85. Okay, so I sold the January 50 puts at $5.85. What can I roll those to? Well, basically, I could certainly go to the 47.50, but I could really go for less than $1, for like 80 cents. I can roll to the 45 puts. So what does that tell me? I can roll down $5 for less than $1. So when 2024 comes out, I can expect the same kind of thing. So when I'm selling the 45 puts in 2023, I expect that I will be able to roll to the 40 puts of 2024. And again, like I said, though, we have such a low PE multiple on the stock. It's hard to imagine it goes much below $40 because $40 is 20% lower than it is now, and currently the PE is 10. When you get down to a PE of 8, it just becomes irrational for value investors not to buy the stock. Something horrible would have had to happen to Walgreens to make you not want that stock if it's trading at 8 times its earnings. So that's how we determine how we're going to make the play. So the end result is the way we like this play set up would be to do 20 of the 4250, 5250 spreads. That's $20,000 worth of spreads that are, by the way, $6 in the money. So they're $12,000 in the money. And that's going to cost us $10,000 of cash. But then we're going to turn around and sell 10 of the $45 puts for $5,000, for $5 each. And now we only laid out $5,000 total cash on the $20,000 spread. Worst case scenario, we have to buy 1,000 shares of Walgreens at $45. Obviously, we could lose the 5,000 too. That would put our net up to 50, which would be basically the current price. But we fully expect that when the 2024s come out, we will be able to roll these over to there for less than $1. If it's $1, then we will have spent $6,000 on the $20,000 spread. That's $12,000 in the money. Still great, right? And the upside, of course, would be $14,000, which is 215% basically. So, you know, that's how we determine the value plays in the market. That's how we determine the strikes we want to do. You think about what's the worst case, where is it going to go, how far is it going to fall, what am I going to do if that happens? And if you have all of that planned out, you have a very, very good chance of making money because nothing's going to throw you, nothing's going to phase you. You're going to do exactly, you're going to get the trade you want. You're going to make the adjustments you want to make when they come along. It's having a plan for your trade. Every trade, you should know exactly what you're going to do. And if you're not comfortable with one of the outcomes, like if I wasn't comfortable owning 1,000 shares of Walgreens, shouldn't be in the trade, right? Or I should reduce the amount of the trade. But 1,000 shares of Walgreens, who pays a 6% dividend, and to own them long term, when I can, by the way, if I had 1,000 shares of Walgreens at $48.75, I could sell the 47.50 calls for $5.50 or $5.75. Right. If it's $5.75, I would net, that would drop my net to 43 with a call away at 50, which is $7 higher, almost a 20% increase. And that would be, I don't even have to sell puts. I could just do that. And now I've knocked my basis down to 43 from 48.75. If I do that every 2 years, my basis will drop from 43 to 38 to 33. And if I ever decide to stop, I'll stop. But the dividends keep coming. That's why it's a fantastic stock. Let's see if is there a scratch pad here? Let's see if we can use this for a scratch pad. So here's the thing. Well, I'll show you how you step into a position. Okay, so step one, if you want to be very conservative stepping into a position, step one, how many shares of this do I want to own? So let's say I want to own $50,000 worth of Walgreens, 10,000 shares. So step one, I would want to do about half of that, and I'll sell 5 puts. What price do I want to own them at? Well, I don't mind owning them at where they are now. In fact, I was going to buy them, but now Phil said I should take options instead. So instead, why don't you sell 5 of the $45 puts for $6.20? So that's it's 6.20 times 500. So now we're going to collect $3,100. So in year one, sorry, I should have done that differently. Minus $3,100. In year one, I've got a $3,100 credit. Now, 18 months go by, and let's say we get assigned, all right? And we're going to get assigned at, what price did we say that was? $47.50? Okay, yeah. So we're going to get assigned at $47.50. So now it's plus, oh man, $47.50 divided by, I got to do this in my head because I can't use the calculator for the other. 23.75, right? Half of $47.50. Yeah. So plus, now it's a cost. So plus $23,750. Now I've spent $20,650 on 500 shares. Got assigned. So now I turn around, and remember this is now 2023, but I turn around and I sell, you know, and again, let's just use the ones that are here, but let's assume we're going to sell the, well, if I divide that by 500, obviously it's 40, right? So I'm at 40 net. Let's say I sell the 750 calls again, and I sell those for 580. So now it's going to be minus half of 580 is 290, right? So minus $2,900 is 17,750. Now, do I want to sell more puts? Well, remember we were willing originally to buy $50,000 worth of WBA, and now here I am sitting here with only 17,750 invested in 500 shares. Because what did we do? We sold the short puts, we got assigned, we turn around and we sell the long puts. And we've driven that price down to 17,750 on 500 shares, about 35 bucks a share. And we had an allocation of $50,000. So now I can see a clear path to getting 1,000 shares cheaply. So here's what I do. I sell another round of puts, and let's say we sell the I'm sorry, we're saying we're down around 47.50. So let's say we sell the 45 puts, but let's say there may be $4. Okay, so we're gonna knock $4 off the price times 500 more. So 500 times 4 is 2,000. So minus $2,000. So now you have 500 shares of stock that were assigned to you. You have 500 calls of 47.50 or 50 or whatever it was we sold. I forgot now. You have 5,000 calls to be called away, or you have 5,000 puts to be assigned to you at the 45 level. And let's say you don't get assigned. So now here you are into 2025, and let's say they both expire worthless and Walgreens is still sitting around 47.50. If they both go worthless, you just do it again. You never got assigned the other 1,000. So if things go flat, if they go up, you might get called away, you make a profit. If they go flat, whatever. Meanwhile, you're collecting a dividend of 500 times, what was it, $2? So you're collecting a $1,000 dividend each year. So you have another $2,000 let's yes, you're going to be minus $2,000 more dollars. So now you have 13,750 in your 500 shares. Now you do it again. This is 2025 now. You sell the 45 calls for $5. You sell whatever. You sell these 50 calls for $5. You're knocking $10 more off the price. $5,000 minus $5,000. You're down to 87.50. This is 2025. You've sold the calls. You've sold the puts to buy more, but your net cost is 87.50 divided by 500 is 17.75. You never used the whole allocation. You've got the stock at 17.75, and you're still getting your $2 dividends. And $2 is now 10%, 12%, whatever the hell it is, of the stock price. That's what you do. The problem is, and we're doing this in the dividend portfolio, we're doing this sort of thing. That's what you have to learn how to do, because that's what it's all about. It takes years. It's 2025 in this thing. Right now it's 2021. 4 years from now, you've got the stock with a basis of 1750, and it's not always perfect, and it goes one way, it goes the other way. But the bottom line is that's the power of this kind of play, that you can knock down your stock price, knock down your stock price. You're returning the cash into your portfolio, which lets you buy more positions and do it more. But if you do this consistently and build your portfolio full of these dividend stocks like this, you will just constantly be getting checks. It's almost funny how you get dividend check, dividend check, dividend check, dividend check when you got a portfolio full of dividend stocks. It's great. They just keep coming. And believe me, you can live off that, because don't forget, we started with a $50,000 allocation block, and we're only using 1/3 of it. And this freaking thing is spitting out $1,000 a year, tying up $17,500. $1,000 a year is coming out of this thing. That is fantastic. So more than 1,000 a year, but whatever. But that's the key to this sort of thing, is you always have to be looking and saying, how can I, you're willing to do it. Now, sometimes the stock will go flying up and you'll get called away. Sometimes it'll go lower and you'll be assigned more. But if you get assigned more and now you have 1,000 shares and your average cost is $25, so now you have 1,000 shares for $25,000 when you were willing to buy 1,000 shares at $48,000. So again, unless the stock has turned very, very ugly, in which case we wouldn't be in this, hopefully not be in this position, we wouldn't have been so aggressive. But unless the stock turns super ugly, you are in phenomenal shape. And 4 years is not long in the grand scheme of things, but we're talking about the kind of thing that can set you up for life, because in 8 years, let's say, double that time, you're going to get all your money out of the stock. Between dividends and put and call sales, you're going to get everything out of the stock. That means that stock is then free. You have no cost basis in the stock. Then you take the other money has been putting to work, and now you've built up a position in another stock. And if that was going well, then you build up a position in another stock. And by that time, now you have 3 stocks in the same 50,000 allocation that you had before. You now have 3 stocks working for you, and if they all paying you $1 dividend, and you all have 500 shares, let's say they're all similar, now you're going to get you have $1,500 a year. It wasn't $1; it was $2 dividend. That's why I get confused. $2 dividend. So you get $2 dividend. You're going to get $3,000 a year off that same $50,000 allocation block. And the money, and you're selling the puts and calls, and you're lowering the basis, and that becomes a profit stream also. So you take that out 16 years, and you're collecting $6,000 a year in dividends. You take it out 32 years, and you're collecting $12,000 in dividends. And don't forget, that's still against the same 50,000 investment. So you have 50,000 investment, and you have probably 8 different $50,000 blocks of stock now working for you. So you have in stock, you have $64,000, $640,000 worth of stock, plus you're cranking in these dividends. It all starts very small, but it can grow really, really fast and make you a ton of money if you play these kind of stocks. And that's why I love it. And that's why I say I have no fear of owning this stock. This is one of the top kind of stocks I want to own. I don't care what advances they have in medicine and drugs and whatever, but you are still going to be going to the freaking pharmacy in 2050. You're still going to be going somewhere to get some pills or whatever. Whatever they invent, they're going to have it. And you know that from Walgreens anyway, right? They got the ear things. They got batteries for hearing aids. They got different kinds of glasses, things that they do. They have all these testing kits for home stuff and diabetic stuff and monitors and this and that. Whatever you need, whatever is invented that you need, they're going to stock it at Walgreens. And they got plenty of rooms. They got a lot of food there too now. So let's see, I got the ghosting. So let's wrap this up. Phil, scroll down list at the bottom of the Bloomberg article. It's easy to see the relative vaccination rates. All right, too late for that. JC says, BABA has become very inexpensive due to the potential political concerns. Are we at a good entry point? Oh, yeah. Are you kidding? I was like all banging the table on BABA last week. Are you in the member chat room? I would think you are. I don't think we have non-members in here. But yeah, absolutely on BABA. Do you recommend selling October 50 calls on WBA? If so, what price would you recommend? October $50 calls on WBA. Why October? No, I think Walgreens is too low in the channel. If I was going to sell anything, I would go out to 2023 and sell the 4750 calls for like the $50 calls almost $5. I would sell those. Gives you a little bit of room for upside and nice protection to the downside. Getting 10% downside protection, and you're effectively selling the stock for net 55. Be kind of happy if you get 55 for it right now, right? And then of course you can roll it as the new stuff comes out. So my call would be to sell these guys the $50 calls in 2023 and collect 470. I'd rather do that. BABA, I don't want to get too much back into it. We had a whole thing about those guys, BABA. And they're down today, so for whatever reason, but we think the whole thing's overblown. And I did a whole write-up about them and why I thought they were too cheap and so on and so forth. But the bottom line is, yeah, of course, we think it's too cheap. We already have it. Oh, I'm sorry, you talked about against the spread. No, I would not sell WBA. Sorry, Brendan. Gotta get back to that. See, I'm not going to sell WBA when it's low in the channel. This is a multi-year chart, but it's low in the channel for the year. It's touching the 50-day move. It's testing not the 50, the 200-day moving average. You can see it better here. It's at the 200-day moving average. All right, and I also believe this is very undervalued. So why would I bet against it? And if you're selling October calls, you're basically betting against the stock going up. I don't believe that. I believe it's going to pop right up from here. It should be a $50+ stock. So I'm not going to do anything to bet against myself at this point. If it gets to 55, I would probably say, yeah, that's capable at 55. I would be starting to want to sell some calls. And also because I'd be satisfied if I'm called away there, I don't mind. But I do mind if I get called away down here, I'd be pretty pissed. So BABA, they were asked, 2 people now asking about BABA. Huh. Is that right? Yes, 2 people asking about BABA. And so what's my opinion of BABA as a new trade? BABA. So look at this. This is horrible, huh? MASH. But, it's this China bullshit rule-changing thing, and things will settle down. And I think BABA's a very good value down here. And again, see, this is the problem with Alibaba, though. You can't do the math. That's the problem with these guys, with Stockopedia. I find that really obnoxious, actually. I'm like, why would I want to know what they make in yen, in yuan? That makes no sense. So the market cap is in English. It's 927,000 is the market cap. 927 billion is the market cap. Just under $1 trillion. What the frick is this, though? All right. Google can tell us. It's you got to remember these are billions. That's right. These are billions. So they're making $172 billion, or I'm sorry, 100. So 172 billion won to US dollars. Google is great. Can you just write that in? So it's 26 billion. There you go. So they're making $26 billion. Very nice. That's what that number means. So it's $26 billion. You can buy the whole kit and caboodle for $900 billion. That is 30 times earnings. It's actually more than 30 times earnings. So they're up there. But it's really good growth if you look at where they are. But like Amazon, you got to wonder how much of this is because people were forced to be home. But 250, 370, 500, 700, that was 2021, 2020. They didn't even slow down from the virus. 2022, 920, 1100. They're going up 20% a year. There's very few times I want to pay 30 times earnings for a company, but if that company is growing 20% a year, you have got to think that's a good thing. So, excuse me. So that's my premise for Baba is I think this is too cheap basically. And the thing about them is right now with the options, if we say 150 is stupidly cheap and you can sell the 150 puts for 24 bucks, your net is 125. So you just say, well, how much Baba do I want for 125? And if you have $125,000, you can do 1,000. If you have $60,000, you can do 5. So you can do 10 puts or you can do 5 puts. Probably start with 5 puts is better. But all you can do is get assigned 500 shares at 125. It's not terrible, right? So 500 times 125, $62,500. That's your zero. If you go bankrupt on you, that's what you get. Meanwhile, you're selling the 150 puts for 24. So now you say 500 times 24. That puts $12,000 in your pocket. And as a spread, let's say what you want to do is look for the most premium you can sell at a reasonable price. But let's just say 200 is a reasonable price. So, oh, look at that. Magically, it's 24. Didn't we just collect 24? So we collected $12,000. This is 20. Wait. Sorry, that's not 24. 200 calls at 22. So 22.25, let's say. So these are 22.25. And if we go down to 150, the 150s are 42. That's way too much premium. I don't like it. It's just really expensive premium. So I think we're probably better off going lower. So let's say the hundreds are 76. So that's only $10 in premium. And if we sell the 150s, that's too low. Maybe these, the 165s, that's got a lot of premium. That's 40 bucks or almost 40 bucks. And what do we say these were? The 100s? Is that where we were? Were we the 100s? It seems so low. No, I don't think we said that. 76? Yeah, we did, 76. So the 100s for 76 because it's got no premium. That's what I like about it, though. The 100s for 76, just like buying the stock. And we sell the 165s for 36. 40 bucks. That would be 40 bucks for a $65 spread. So let's see if we do. If we only do the same amount, if we only do 5 of those spreads, so 500 times 40 is 20,000 minus 12,000 for selling the puts is $8,000 net. And that was on the 100, 160 full call spread. So that would be a $30,000 spread. That means you have 22 years. I mean, come on, that's pretty good. You have $22,000 of upside off of 8. That's almost a triple. And all Alibaba has to do is not go lower. You got 5 of these spreads, and they're $60 spreads, so $24,000. And you're only paying, and meanwhile you sold these for 12 or whatever. I'm sorry, whatever the math was. But you sell these guys for $12,000. You net with net 8, whatever, however it worked out. And now you can get back, if all goes well, to $24,000 or $20,000, I think it was, whatever the number was when the spread figured it out. But the bottom line is, that's the way you play it. It's not risky, and you're going to make 200%. Why take a riskier position if you can make 200% doing that? And your downside is only 500 shares of Alibaba. The worst thing that can happen to you, you own 500 shares. And if you like that idea, if you think 500 shares are a bargain down here, why not make the commitment? So that's Baba, and last one, because I got to go, and it's not even early. I really had to go. Trox. So Brendan says Trox is going well, and Trox is I like them actually. Enter symbol TROX. Holy cow! Oh wow! Ooh. Specialty metals, gotta love it. So yeah, they were a top trade not long ago. I think I forgot when, but they've blasted up. But you have to think of things that are going to be put to use in an expanding economy, and you see things running out and the shortage of supplies and so on and so forth. And so Trox is a good specialty metal company, and it was worth backing. Came out of the Alcoa spinoff. So anyway, all right. I gotta go take some phone calls. Everybody have a lovely week. It's been very nice talking to you, and we'll do it again next week. All right, take care.